everybody. Welcome to another vlog for Clear Glass Capital Partners and our capital raising series. Today I want to take you quickly through 5 points on capital raising for hedge funds, alternative funds, things of that nature. We'll try to keep them very short, pithy. Forgot to shave again today. It's Thursday. Probably need to start doing that more often. But let's jump in. Point number one, and I'll keep it very simple. Follow the money, right? You want to make sure that investors love to have simple tax structures. So following the money means following the tax structures and where they make sense. And that's why people will usually domicile in Cayman or some other jurisdiction that they understand the tax structure that is friendly to them, and will allow for like tax flow through type structures, right? And so you could easily go to a tax advisor if you're starting a new fund or you're an investor and you're looking to invest in tax efficient vehicles. Go to your tax advisor, right? You also want to make sure that your documents and everything is going to be regarding the structures is going to be very simple, right? And in easy to use terms. And that's where it leads us to point number 2, which is keep it simple. You want to make everything as user friendly as it is, financial, legal terms, simple as possible, right? Use it, keep it very mainstream. Think of it in this way. Your investment strategy, or at least the main principles, are complex enough. So just make sure everything that surrounds it is easy to digest for your investors, right? Keep the rest of your story as simple as possible. This also means, all your presentations, right? Concise documents. Make sure, your PowerPoint presentation is very simple. This is a very critical point, and you just want to make sure that you're getting the point across, because experienced investors regard the cohesion and the due diligence of this to be there, and they're going to look at it and make sure that it's streamlined. So you want to just keep that simple, streamlined, strong message, but keeping it simple, right? Is also as it relates to the PPM, the private offering, all the versions of that. You want to make sure that it's easy to read. Third point, try to get soft commitments, right? When you present your fund to potential investors, try to get a soft commitment to your fund. Not on the first try or the first meeting. You got to build a little bit of rapport, make sure they trust you, but you got to start asking for money and indications of interest. By like the third meeting, ensure that they are genuine and they're interested in your product so that you're not wasting time. So, focus on those. Make sure that your docs are simple. And you're not sending docs to them either, right? If you're looking for anchor investors, right? Make sure that you're consolidating your investor base. Make sure that you're looking for the demands that are in the strategy that you're offering, and that those demands are being committed to, right? Or, for instance, a soft commitment might be an investor will give you an indication of $5 million. However, you must raise 25 or 50 for them to give you that 5, right? And get that soft commitment. I think one that probably makes sense, follow the law, right? You're raising capital for a vehicle. It's a company. You have to know which statute you're trying to raise capital under, particularly if it's domestic in the US. What type of individuals can invest in that? If you're going under a 506B, 506C offering, know what you're using, and that's where you need to implore either someone that understands that, your marketing person that you're hiring internally, your IR, or you're going to a third-party placement agent, or any other type of investment bank, etc., that's going to help you with that capital raise. And so you should know all your do's and don'ts in that area so that it's very easy for you to get in there. Lastly, point number 5, be ready with final documents when needed. but not any earlier. Do not send people your final PPM before they ask for it. Do not send out a DDQ before they ask for it. Do not send out subscription documents before they ask for it. You know, you have formal legal documents, the bylaws, the association, the corporate forms, the PPM, subscription documents. You want to have all of these ready, and they should be ready. If you're looking for anchor investors, they should be 95%, because the anchor investor might want to change or help you with some of the terms in there. But you want to have those ready. Once you have those anchors or seeds and you're moving on to those soft commitments, have those docs ready, but do not send them out. Anyway, quick 5 tips. Hopefully you got a nugget or two out of those. Plan your work your plan. Stick to it. It's a marathon, not a sprint, as I've said many times and experienced many times, and you'll be successful. Take care for now. Talk to you soon.